So, ladies and gentlemen, this is Projack TNT Sunrise, and today is 2020 September 2nd. Welcome to my webinar, and I'm going to cover some of the products and the markets, okay, for you guys. So the first thing is about the dollar index, right? So we can see the dollar index in 4-hour chart. It shows some support from this trend line, okay, from 91.79, okay, and looks like it's going to have a reversal. Okay, but I doubt that. Okay, I really doubt that the dollar's index a reversal, because from the fundamental views, from just now the ADP data, it just tells me the jobs market is not good. Okay, and and still the U.S. The the coronavirus situation is still very serious. And although the dollar index have some kind of a bounce, but it may be just a bounce, and another downfall is like looking for short. I think the people who are going to short the dollar index from this 93.50 level and waiting for the price to climb even higher, and then another sell will be coming. Okay, because on weekly chart we can see that this is just a pullback, right? This is a typical very minimum pullback, because after sideways for so many candles, okay, 1, 2, 3, 4, okay, 4 weeks bearish candles, okay, and this is just an inside bar breakdown, and now it's pulling back, but I think the pullback will be end from 92.93 from this level. So after the pullback finish, okay, if this week the dollar index failed to close above 93.36, okay, I will still consider the dollar index a bearish market. All right, so key point, okay, dollar index need to close weekly chart, okay, above 93.36, okay, to become a pivot, okay. Otherwise, okay, we are still bearish on dollar index. You copy that? Okay, give me 5. Give me 5 if you understand what I'm talking. Okay, I need the weekly candle to become something like this. Okay, it has to close above the last candle's high, which is 93.36. Okay, to become a pivot. Okay, which means maybe there's a reversal. Okay, after that, the dollar is still in a strong bearish channel. Look at the trend line is not broken yet, still there. Okay, and it's a 4 weeks sideways and a breakdown, and this actually contains a lot of power, a lot of energy here. A lot of people are selling dollar index in this area, and they have to defend their zone, okay, so that they won't be killed by those bullish people. Okay, so from daily chart, okay, this is just a bounce, right? And it may stop from 93 level. And I think by the way, if you go to 4-hour chart, you can see it's already pulls back to 618 level, okay, 92.81, okay, already pulled back to this level, and the structure here is just right here. Okay, so this means the dollar index will have some pressure or resistance from here, and if it did turn around, okay, and means another wave down is going to happen, right? Yeah, so let's come back, but definitely don't short dollar index now, because it's making higher high, and of course for the euro we may getting a very good place to buy the euro again, because our last trades from the euro are very successful. Hits 1.20 as my prediction from 2 months ago, which is June here, okay, and last time it's still at 1.1330, sorry, 70, yeah. So you can see this cabinet handle pattern is pretty powerful. Okay, 1.13464, and I said aim 1.18, 1.20, and 1.22. Okay, so today the 1.20, sorry, yesterday the 1.20 is just hit. Okay, and really we earned a lot of money. Okay, it's almost 700 pips. Okay, so we can take some money and just watch the behavior, watch the performance of the euro. Okay, it may have some correction move back to the origin support from 1.18 at this level. Still, this level will be very strong. Okay, and the pullback come here and make just go up again, because still is in the uptrend channel here. Okay. Okay, still the euro is in uptrend channel, so I will be still focusing on buying the euro here, here, and here. Okay, so I'm just waiting for the price to come a little bit lower. Maybe I will use the Fibonacci level 0.86 to catch the final point, like 1.1815 and 1.1790. Okay, focus on this level to find your best chance to buy the euro again. Okay. 1.1815 to 1.1790. Okay, if the euro cannot break the channel and find some support from here, I think that will be perfect. Okay, for us to catch another rally. And this rally may go to 1.22. For the sterling dollar, it also shoots to almost 1.35, which I mentioned also 2 months ago, and I said the sterling would be strong. Okay, buy sterling from all the way 1.22, right? So now it come to 1.34, and I really hope that you earn this money. Okay, so what we can do is we don't want to chase the high, we don't want to buy here, but we want to focus on buying the pullback. Okay, the pullback level will be at 1.32 level. Okay, 1.32 somewhere here. Okay, so let's go to 4-hour chart and see where is it. Okay, so this is a whole string swing up. Okay, and we want to use the Fibonacci here to measure the 618, which is 1.32179, and look left. Okay, look left here. This is a very good support. Okay, so the sterling dollar try to find some support from 1.3217, and we want to buy from here. Okay. All right. Let's go for the gold. Okay. The gold has a breakdown today. After the ADP, the data, it actually break the 1950 level, and this is to make a bearish move. Okay, and I think we can wait for a pullback to sell. In fact, the pullback just happened here at 1.1952. Okay, just happened here. Okay, breakdown, pullback, and now let's have another like a $10 move. Okay. However, if you want to buy the gold, it's still okay, because if you measure the whole entire way from here, okay, let's just measure the Fibonacci level from here. Swing high, swing low to swing high, and we can find 1941 is just a very good support from the 618 level here. And look left. Okay, yeah, we do have a structure sitting right here, which is the previous bearish engulfing candles opening price, which is here. Okay, so watch this level. Okay, 1941 will be very, very critical for the gold. 1941. All right, I repeat. Okay, so if 1941 can support the gold well, this might be a flipping level. Okay, because above this level, the gold will be uptrend. You can see here, above this level is actually a bullish trend, right? But below this level, it just keep moving down. Okay, so this will be a flipping level to determine overall is bullish or bearish. Okay, so I want you guys to focus on this level and zoom in to the lower time frame to find whatever patterns that you can recognize, okay, and to make some trade, right? For example, okay, 30-minute charts. What we got is a very strong bearish candle right now, okay, but we still have 10 minutes to close this candle, okay. And if you go to 15-minute charts, okay, and we can see there is a ABCD move potentially, okay. This could be an ABCD move, right? Right, AB move, pullback, and CD move, and it's going to be complete at 1936. Okay, so if the price can complete this ABCD move, what will be your choice? Can I have your options? You see a strong move AB, and you see a BC move here, okay? And another wave coming down, okay? Completion point at 1935, just a $6 below, okay? And you know that the 618 level is here, right? Let me just confirm the lowest point here, 1937, okay? So do you think, okay, do you think that gold may have some reversal from 1937? Yeah. Okay. So this is what we can find, right? Okay. And another, let's trying to find more clues, right? So I will use this. I'll use this bounce as a correction move, right? Because after correction, it remains another bearish move, right? Okay. So can I use inverse Fibonacci extension? And you can see here, it tells me, okay, the bounce happens, okay, and now the price come back to more than 1.618 reverse extension, and it comes to the 1940, which is a 200%. Okay, basically means 200% means it actually moves in a one-to-one measure movement, okay. So will the price, okay, after making a 200% movement, and will it come back to 1956? Do you think so? Do you think that this might be some kind of sign shows that the gold is not for you to chasing the low to sell at this point, but you rather wait for the price to come back to 1956 to sell? Right? Minus says gold now falling into head and shoulder pattern. Okay, let's see 1 hour chart. I think you are referring to this pattern. Do you? Are you referring to this pattern? Okay. Yeah. Technically speaking, yes, it is. This is a potential head and shoulder. I agree with you. The only problem is the right shoulder is a little bit. The time is not enough. Okay. So the time for the right shoulder is not enough. It didn't really give more, at least like, you know, look at the left shoulder, it contains this kind of time, right? But the right shoulder, it didn't really, you know, not yet. Okay, so this might not be a real, you know, or classical head and shoulder, but it just makes sense of the structural breakout. Right, structural breakout and pullback and another wave down. Okay, but it's come to the supporting area as well. Okay, and if you measure the movement of the whole, this very super long pin bar here all the way to here, and remember in last Friday when I make a webinar here, and I mentioned a long gold trade from 1913. Do you remember that? Right. In my last webinar, I said we can buy from here, from this pin bar, and we are aiming for 1990. Yeah, and this is a very good trade. And now the price just come to the half of this overall trading range. So let's just measure the half range. Where is it? Okay, it's at 1943. Okay. Do you think this is coincidence? 1943 is actually represents the upper half and the lower half. It's the midline, right? This is a midline. Okay, so what I think the gold is just making, you know, it's just a kind of a naughty boy. Just want to, you know, to scare all of the bulls, right? Make people want to chase the low to sell into this in lower half, but in fact, it already break out the lower half and want to become upside. Okay. Okay, so 1943 to 1937, which I will be strongly recommend for you guys to look at this area and find some patterns that you know to trade bullish patterns, right? For example, here, 5-minute charts, what do you get? What do you get? Okay, of course, 5-minute charts, we find an inside bar potentially, right? So we can immediately we can check this inside bars low and high and get ready to do what? if the candle from 10 o'clock 25 to 10 o'clock to 10:30, okay, the basically means the last 5 minutes. All right, is this candle, right? Because we are now, the time is 10:25. It's last 5 minutes candle before this 30 minutes chart, before 10:30. So if this candle breaks up, do you think you can make a buy? Question. You know that 1943 is previous, the halfway, okay? Basically the midline here, okay? And we just found our 5 minutes inside the bar. It looks like it's going to break out. So if it breaks up, can we take a buy? And how many lot size will you choose? Can I buy from 1944 and the stop loss 1941? So my stop loss will be just around 1941. Okay, 1940.50. Okay. All right, just a breakout. Okay. Can we do that? Do you want to pull your trigger? It's just to cover 5 minutes inside of our up. And our target is not very far. Okay. We just want to have this 1-to-1 first. Okay. Then maybe the 1-to-2 or 1-to-4. Okay. 56. Okay. So the moment it actually hit 1949, okay, we are going to took half of the position and make sure this trade is going to be a risk-free trade, right? So let's measure. So this is my risk, okay, and I apply the clone function. 1-to-1 is here, so 1947 is my first target. Okay, then the 1-to-2 is here, which is 1950. Okay, so after you hit 1-to-1, you can take half profit, okay, and then you can let the rest run, see how many pips it can give you. All right, so how many lot size should you trade? Okay, if we trade $200 risk, okay, our entry is 1944 minus our stop loss 1941, close to $3, okay, which means we can trade a 0.66 lot, okay, because 0.66 times 100, okay, which means I bought 66 ounce gold times $3, okay, is about 200. Okay, so this is how many lot size you can trade. Okay, so trade 0.66 lot and aim for a 1-to-1 and 1-to-2 or even 1-to-4, like 1-to-1962. Okay, have you done the trade? Do you agree with this inside bar logic, or do you recognize this as an inside bar? If yes, right, you should be okay to pull your trigger to buy the gold here. Right, we are not scared of this, bearish power, because we know that if the forms inside bar breaks up, okay, before it actually kick our stop loss, we are always ready to buy the breakout. Okay, if I like, no, okay, good. Did it hit my stop loss? Not yet. Not yet. Oh yeah, it hit. Okay, forget about it. So now it's becoming inside bar breakdown. Okay. Leave close all your trade from this buy. It's actually a, like a false breakout, right? It breaks a little bit and then breaks down again. So this inside bar failed, right? Okay, take the risk, take the money from me. It's okay. I'm okay with this loss because I'm just risking this much of the space. Okay, if the price continue falling down another $10 or $20, I'm be okay because I have already run out, escaped, right? Yeah, stop loss hit. That's very, very, common as traders. We're always trading, placing our orders to place our risk to get some trade, right? It can be a breakout, it can be a fake breakout, who knows, right? But it's just like we know that this place is okay for us to pick a trade here. All right, so it looks like 4-hour chart still very bearish, okay, still bearish here. In 5-minute charts, we find our inside the bar break up and then hit my stop loss. Oh, wow. Wow. Yeah. See, this is how the bears attack the previous low here, and this shows too many people are still selling here. Okay, a lot of people are a lot of traders are still selling into this, trying to break the lower low here. Okay. Okay. I will mark this level. I will mark this 1944 again. Okay. So because this is a very strong bearish candle here, okay, they attack, the sellers attack from here, but now what do you think? Do you think they succeed? Do you think the sellers succeed to making it lower low, guys? Do they? No. Okay, so now we can use two try rule. Okay, use two try rule. Okay, to pick another trade, and it just happened, right? Okay, because seller tried once, okay, seller tried it twice, and failed to break lower low, and now it's making a higher high, right? So this is two try, okay, and the seller failed, so we can buy it. I go right now. Okay, just restore your position here and put your stop loss below the lowest point here. Okay, we can do this because the seller makes some failure at this level. Looks like a double bottoms formed, right? So it's okay for me to took another trade here. Okay, 1945, I open the trade. Okay, 1939 will be my stop loss. Okay, look, good, right? Just breaks up. Very good. Okay, so this is a two try rules example. Although the first inside bar, well, we have failed, but it's okay for us to restore the position here. We just re-enter the trade. Okay, but you need to calculate the risk. Now the risk is about $60, $6. Okay, so you can trade like 0.33 lot. Okay, still get a $200 risk here, and our target will be still the same, like 1-to-1 and 1-to-2. All right. Okay, so this is a two try rule for us to to encounter this kind of second try but fail to break new low, right? Okay, so 30-minute charts. Okay, some bullish sentiment comes in. Okay, this may be a 30-minute chart inside of again. So I will be interested to buy another 30-minute charts inside of up from this level if it gives me. All right, I'll be also interested to trade inside of breakdown. Why? Why? Okay, now we have two choices, right? We can choose to trade the inside bar up after 30 minutes. Okay, due to 1943 is an important support. Now I do mention if the inside bar break down, we can also consider to short. Why? Do you feel the contradiction? Like, hey, Jack, how can you do that? You're telling me 1943 may be a very strong support, and you want me guys to find bullish pattern to kick in the trade to buy, right? And aim 1956. But why do you want to choose an inside bar breakdown? You also want to sell. Why? It seems like you want to do the either of the trade. It's either a breakout or the breakdown. Yeah, it's not only because it breaks the 6.8. It's because of momentum, right? So we have to, the fact is now the momentum is still down. Okay, so if 30 minutes inside the bar break down, it actually fits into the same direction of the momentum, right? That's why we can short. We can catch the momentum. All right. So this is the beauty of inside the bar. You don't need to be deciding, oh, hey, you want to be bullish or bearish. No, you can just based on the chart and you let the market decide. If it becomes a reversal pattern, okay, it will become something like this, right? Mother bar, inside the bar, and then breaks up, and I want to buy. And our target will be like 1956. If it breaks down, okay, good. The momentum is still down. Okay, inside bar tells me trend continuation may still happen, and it just breaks new low. Let me just do the inside bar breakdown, and I will aim 1932 or 1936. Still 1-to-1 at close half, right? So this is a very, very basic logic of how to trade inside the bar. Do you get it? We are not, confused by the market. We just trade whatever patterns that we recognize, and we trade based on the patterns. Trade what you see. Okay. Of course, you can see the 1 hour chart is still bearish, but nothing, yet we can trade. 1 hour chart is a little bit longer, and in 4 hour chart is still a very bearish candle. Okay, didn't really happen any, good patterns for me, right? So I will not consider to buy or sell at this place in from 4 hour chart onwards. Okay, but I may consider some quick trade from 15-minute charts or 30-minute charts, because this 2 time frame may give me some intraday trades, such as inside bar up or inside bar down, which can give me at least 1-to-1 returns. Okay. All right. Good. So let's go back to the euro. Okay. Euro. Oh, euro is reverse. Euro have 2 pings on 30-minute charts. That means this is a good sign of a reversal. Okay. So okay to enter for the euro trade right now, I think. Yeah, it just hits the previous year, 1.1929. Okay, sterling not so good. It's still not yet come to 1.326. I will wait for the sterling, right? For the dollar Canadian, it's kind of flat. This is a flat pattern here. Okay, it looks like it breaks out and failed to maintain above. So the dollar Canadian is still back into the sideways markets here. A lot of people are changing their position here. The sellers are sell, the buyers are buy. They are exchange their money into the either ways. But after the very strong 1, 2, 3, 4, 5, 6 pin bar here, it just tell me the 1.31 will become very strong resistance for the Canadian dollar. Sorry, for the dollar Canadian. Okay, and you may catch a sell from here. Okay, you may catch a sell from dollar Canadian. Aussie dollar is okay to buy the low. Okay, I will wait for this place to buy, which is 0.7290. Okay, this is a previous high here. Look at it here. Look at this ping. We have this ping here. Okay, and it breaks out, and I want to use the ping the same place as a structure to break out and retest. I want to buy from 0.7290 so that I can have a very, very good entry, and my stop loss to be just below this bullish candle here, which is 0.7258. Okay, so this could be a good opportunity to buy the Aussie from here, and I will aim for the previous high and even higher. Okay, because daily chart already still in a uptrend channel, just like the S&P, right? Just keep making new high, right? The Aussie is totally a very strong bullish trend, right? And it may goes all the way to like 0.78 or 0.80. Okay, but try to be careful about here, because when Aussie come back to here, I think we just do a mirror patterns like this. Okay. This is a V shape, right? And after it hits here, it may just have another 4, and then it goes up like this. Okay, so to form a very big head and shoulder patterns, like just like a mirror. Okay, in mirroring from this midline here. Okay. Swiss, the pound versus Swiss franc. Oh yeah, you can consider to buy the sterling Swiss when the pullback to 1.2087. Use this place to to trade. Okay. Yeah, monthly chart is very low, yes, but you want to find a better entry. It's 1.2087. Okay. Yeah. Monthly chart is really like value investing, right? Yeah, I agree with you. It may just ride to 1.45. Okay. Same for sterling yen. Yeah, sterling yen, I'm still bullish. I'm still bullish on sterling yen because monthly chart is very, very strong. It just breaks the new this kind of resistance already broken. Okay. And I think certainly after pullback, it will just shoot up again. So daily chart, I will wait for the 30 yen to come back to 140 level to make my buy from here. Okay, because 30 yen will move very fast. So try not to buy from here. Try to buy at a very low place. Okay, buy the low. All right. The oil. Okay, oil now I have to sell. Okay, I will only want to sell the oil because just to break this triangle and look at the pin here, just nicely pull back. Okay, so short oil. Okay, from 42.60, right? Aim 41.60. This is kind of a consolidation, leads to expansion, right? So oil you can sell from 42.60 level. The structure was broken, and it will just easily come back to 41.60, or maybe they will touch 40.50, like this level. Okay, somewhere here. We're trying to get this money to your pocket. Right. Okay, let's look at Bitcoin. Bitcoin is bearish right now. It breaks new structure, breaks trend line here. So it may just retest the 11K. I think the 11K will be still very strong support from here, because last time it actually makes some bullish movement of behavior from here. So the BTC may still pull back to 11K. Okay. For the Ethereum, this is a turn. This is a turnover here. Okay, it's actually a flipping top is come here. So 470 becomes a strong resistance, and now it actually comes support from 429 from 30. So it may bounce from this level several times, and then it may choose direction after that. So right now the Ethereum is we want to stay away from this market because it's still not too low to come to the support of 360. Okay, this 360 is even equivalent to the BTC's 11K support, but the Ethereum is definitely too expensive right now, and the high is also established. So you can consider the Ethereum as a sideways market as for now, but we want to trade the next breakout or next wave after the consolidation breakout, right? So for the S&P, nowadays most of the pin bars in candlesticks are not working. Any reason? Please explain. It depends on which kind of time frame you are trading, right? If you are focusing on daily chart, I think the pin bar is still working. Okay, you can see very good of this, like this too, right? Bullish pin bar in a bullish trend, it just tells you it keeps going up. Okay, if you check the daily chart, like the gold here, this pin is working. Okay, and this pin, they are working. This 3 pins are working. Okay, so try not to find some too small time frames pin bar like this. Okay, if you are looking like 30-minute chart or 1 hour chart, the pin bar may be maybe cheated from this level. Okay, you maybe just break out and touch your stop loss, break out and touch your stop loss, right? Because recently the volatility is too high. Okay, the gold never have this kind of volatility before, right? Just can you imagine just in 5-minute charts the gold can just rally about like $20 in 5-minute charts, and the gold can just crash like this, like up $60 and down $70, right? And how can you expect this kind of thing to work? Because in such a volatile market, this thing may not work, right? It's very, very common. It just tells you the liquidity is very low here, okay? Because people will trying to get rid of the trade in a very fast hand. Less people want to to keep buying the gold or keep selling the gold, because anything could happen. The volatility becomes the enemy. Okay, if you hold your long position too long, and you may stop loss, and you may lose a lot of money due to the high volatility. If you hold your short position too long, you may also be damaged. Okay, so that's why the liquidation of the market is low here. That's why the gold can up and down so crazy. Okay, and that's why a pin bar may not be okay to trade, but still you can still find some good trade. Like after this pin bar, okay, you can see from 1958 instantly to 1968. Okay, $10 movement of this pin bar, right? Even of this, still you can make some money. but try to close the trade or took half profit and moves up to break even to protect your profit. That would be a better choice. Okay. Yeah, if you want to hold, if you want to trade some higher time frame trade based on the price actions, I will suggest you to enlarge your risk, your risk distance, and squeeze or shrink your lot size. Okay, try to doing less trade, but with good entries. Try to not open more trades in a not very good, strong or support or resistance level. All right, yeah, focus on the high time, and I will strongly recommend to you guys to look at 8-hour chart. Okay, because 8-hour chart is normally very convincing. Okay, you can see here 8-hour pin, okay, 8-hour reversal, an 8-hour engulfing, okay, an 8-hour inside bar breakdown, okay, normally leads to a very stable, move after this kind of a price action. Okay, so even in the last week, there's an 8-hour inside bar up, you still can make a lot of money here. Okay, so 8-hour chart will be very convincing for you guys to consider, to think where is the best entry, where is the potential zone for you to enter your trade. Okay, now you can see the price comes back to the 8-hour inside the bars, breaking out a point here. Okay, so do you agree that this level would be important? Do you think so? Yeah, because this is in 8 hours inside the bar, right? And just like this is 8 hours bullish engulfing. Yeah, and the retail it just works very well. Okay, so I will now trying to look at a higher time frame to look for more stable outcome of the trades, because in 5-minute charts or 30-minute charts, the direction of the market will be changed anytime, and it will be harder for you to take profit, because it just changed too fast and you are not ready to exit your position quick enough, and you'll be hurt. Canadian yen. All right, good. So let's look at the Canadian yen. Okay, in daily chart, Canadian yen still is doing very well. Okay, 80 is a very strong level. Okay, and I think the Canadian is likely to break out the previous high here. Okay, now if the price of the Canadian yen can break out 81.89, it will just push the Canadian all the way to 84. Okay, so this is becomes kind of another cup and handle patterns. So you can consider this as a cup and handle patterns as well. Okay, a cup is made, right, and another handle is also made. Okay, so it just needs to be break out of the 81.90. Okay, and if this was made, it will just shoot out to 84. So I will still to buying the low of the Canadian yen. Yeah, that will be my first #1 priority of this trade, to buy the Canadian yen. Yeah. If oil goes down, I doubt Canadian to go up, right? If oil goes down, the dollar Canadian will move up. Okay, which means the Canadian dollar will be depreciating. Okay, but how about the yen? Okay. Maybe the dollar yen will also move up, right? And that could actually push the Canadian yen higher. Because in daily chart, you can see the dollar yen is trying to find some support from 105. And the dollar yen didn't really have much gain since the last 2 months. So if the dollar yen can move to 109, and the Canadian yen may also break out. Okay, so that could be a good reason that we want to buy the Canadian yen, because after all, you go to check the weekly chart of dollar Canadian is super bearish. Okay, I can tell you the Canadian dollar may be very strong in the next few years, right? Because this is a super monthly pin bar here, tells you 1.46 is actually a very strong resistance that the dollar Canadian cannot break through, and the monthly trend line was broken. okay, in the last month. You can see here, just broken. So if the dollar Canadian maintains the bearish trend, which actually will push the dollar Canadian to 1.15 at least, okay? And I think the Canadian dollar will be gaining a lot of value, okay, from this kind of movement. And also the dollar yen may have an upside move, and that's why I will be very interested to trade a long position of Canadian yen. Okay, so this is the logic behind the reasons why I choose Canadian. And of course, you can also find some technical patterns, okay, in Canadian yen's monthly chart itself. You can see very strong support from 76, okay? This is a monthly chart, monthly support. And a very, very strong reversal comes here. And the recent downtrend line is going to be broken, okay? So what do you think? The price moved down here, price come back here, a second wave failed. Do you think the Canadian yen may catch up to $100? Do you think so? Or is it possible, right? We know that the harmonic patterns also comes in a move here, okay? Even higher, 116, who knows, right? But it's also okay for us to, you know, it's just okay for you to buy something at this extremely low level, which is better investing, right? Because the Canadian dollar will be better performance, okay? Better performing, outperforming than the yen, definitely, okay? What's your thought on US election? Wow, I have no thought of the US election. I just wait. And maybe I'll just check the price action to either sell the dollar or to buy the dollar. It depends. Okay, but generally speaking, if the Trump can, you know, still be the president for the USA, I think that would be good for the dollar. Yeah. So Trump's success of the election will actually have some bullish sign of the dollar, because overall he actually did a lot of a job, you know, in the States, and the economy is getting well after before the coronavirus. And looking at S&P, right? Because the businessmen, the companies do like Trump because actually with his leadership, the S&P is getting all-time high. Okay, so yeah, I think it's okay for you to check the performance of the S&P to to predict who will be the winner. Okay. All right, so I think that's all for today. So thanks for coming, and I just have two new students signed up for my course, and I think it's very good because they are just going to start to become a good traders. And today I received one of my students, Raffles, a message that he now becomes a professional trader after, you know, after he actually signed up for my course, and then now he can become very, very profitable consistently. And he's getting his first funding, okay, from his investors. And he wrote to me, he said, yeah, it's a very good choice for himself to continue to learn the trading strategy from me, right? So if you want to become a good trader like me or like my students, okay, you can consider sign up my course, right? So this is howmuchasia.com, and all my course information is here, right? So last but not least, okay, take care and have good planning of the trade, right? And have very steady trading results, all right? Thank you, guys. See you next time. Bye.